Thank you, Mr. Chairman. Just for the record, not all 70s music is that bad. So congratulations to all of the nominees. Dr. Newman and Mr. Kouzoukas, my office has heard from constituents who rely on Social Security and Social Security disability payments and have received letters demanding money back for overpayments made by the agency. According to recent reports, critically low staffing levels mean it could be several years before the Social Security Administration can reassess cases and catch overpayments. Some individuals are even receiving bills from the Social Security Administration that date back 40 years. Okay. In your view, how much of this is caused by chronic understaffing at the Social Security Administration?
Senator, thank you for the question. I think that this highlights perhaps the distinction between the role of the trustees and the folks who run the Social Security program. Obviously, Dr. Newman and I, if confirmed, would have the privilege of serving with those folks and that leadership. And our role would be to assess the financial and fiscal future of the program, to provide data and information to this Congress and the public about the disability insurance program in terms of its financial status and the like. So I think that the kinds of questions you're perhaps getting at relate to the administration of the program day to day, which we wouldn't be involved in.
Well, except that in terms of its fiscal integrity, if we are talking about 4 decades that people are getting notices, if we are thinking about the rate in which there may be overpayments, and of course, even though you're looking at fiscal integrity, I would assume that you also want the program to work well as it relates to the well-being of the beneficiaries. This is an issue because if we're talking about millions of dollars, it goes to the fiscal integrity. Wouldn't you agree?
I could see the connection as part of the larger, broader picture of the way that the finances roll up to the program, sir.
Let me ask you this, both of you. According to the Social Security Administration Inspector General, during fiscal year 2022, the agency, and this goes to fiscal integrity, clawed back $4.7 billion of overpayments, while another $21.6 billion remained outstanding. According to recent reports, those who receive Social Security payments say they've gotten letters stating they must give back thousands or even tens of thousands of dollars to the government because of overpayment. What else would you be looking for to have fiscal integrity here to make sure that we're not talking about billions of dollars, assuming that the administration is right and these are overpayments? Obviously, to some degree, there has to be a universe of it that is, but it's a very significant number.
Dear friends, this is serious news. The Internal Revenue Service has just released a very important announcement. Officials say that Americans failed to pay a record of $688 billion in taxes in 2021. The tax agency has released its new plans to address this issue. However, this may affect many Americans financially. My dear friends, please do me a big favor and watch until the end of this video. Also, in a video later today, I will be announcing the winners of today's Walmart gift card giveaway, so please make sure that you do stay tuned. If you would like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the giveaways. According to the Internal Revenue Service, Americans failed to pay $688 billion in taxes on their 2021 tax returns, and that is a record level. The agency said it is taking urgent steps to increase compliance, such as auditing more high-income taxpayers, as well as businesses and partnerships. The $688 billion estimate reflects the first time that the IRS is providing information about the so-called tax gap on an annual basis, with the agency noting that it plans to continue providing the data on a yearly basis. The number reflects an increase of more than $138 billion for tax years 2017 to 2019. The IRS is ratcheting up audits on wealthy taxpayers. This is part of its directive after receiving billions of dollars in new funding through the Inflation Reduction Act. The agency has said it wants to go after higher earners who skirt their tax obligations in order to help close a tax gap and raise more money for federal coffers. IRS Commissioner Danny Werfel said, "This increase in the tax gap underscores the importance of increased IRS compliance efforts on key areas. These steps are urgent in many ways, including adding more fairness to the tax system, protecting those who pay their taxes, and working to combat the tax gap." The IRS has also said it will not increase audits on households earning less than $400,000 a year. The tax gap is a difference between the estimated taxes that are owed and what is actually paid on time. It includes 3 key shortfalls: taxes that are not filed, taxes that are underreported, and then taxes that are underpaid. Approximately 85% of taxes are paid voluntarily and on time. Non-filing occurs when people do not file their annual tax returns on time. This can happen for a number of reasons. For instance, some people do not file due to avoidance if they are worried about owing a big tax debt. Others fall behind due to personal issues in their lives. In 2021, about $77 billion in taxes were unpaid due to non-filing. Underreporting is when people do not report all of their income, such as when people who are paid in cash fail to report that on their annual returns, which can result in lower taxes than they actually owe. Underreporting accounted for $542 billion of 2021's tax gap. While the summer brought lower inflation rates, higher jobs rate, and boosts of consumer spending, Bloomberg Economics is warning that a recession is more likely than not happening soon, citing the return of student loan repayments and the looming threat of a government shutdown after Congress's short-term spending bill lapses in November. Bloomberg Economics predicted at least a 1 percentage point decrease in GDP growth in the fourth quarter, referencing data that showed optimism about the economy often peaks before a downturn hits. Bloomberg pointed to 2007 comments from Janet Yellen, in which she predicted a soft landing 2 months before the beginning of the Great Recession. Last month, Secretary Yellen, who is now the Treasury Department Secretary, said she's feeling very good about the United States making a soft economic landing without a recession. Bloomberg pointed to the nonlinear nature of recessions that contradict people's predictions that similar trends naturally will continue. Bloomberg also used the example of the Federal Reserve's latest unemployment forecasts, which predicted the jobless rate to reach 4.1% by the end of 2023 and 4.7% by the end of 2024, which would indicate avoiding a recession. The Federal Reserve has raised its rates multiple times over the past year and a half, reaching a 22-year high in an effort to combat inflation. This past Monday, Federal Reserve Governor Michelle Bowman said additional interest rate hikes will likely be needed in the wake of rising energy prices in order to get inflation back to its 2% target. Well, my greatest and most amazing friends, that is the end of my daily stimulus update video for today. My dear friends, in a video later today, I will be announcing several winners for the Walmart gift card giveaway. Please make sure that you enter today's giveaway by clicking and liking several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning the weekly giveaways. Thank you and have a wonderful and very blessed Friday.